Hey traders, how are you? Vladimir Ribakov here, Traders Academy Club, and welcome to the weekly Forex Outlook for the week starting from 19th of August to the 24th of August. Previous week was very interesting, provided us some great opportunities, and it looks that slowly the summer is over. The volatility is back, the traders are back, the volumes are back, and it feels well on the market. So before we start technically, first of all, thank you very much for your time watching this video. I hope you enjoyed it and you find it useful for your own trading. My idea is to share my best opportunities the way I see that for the coming week. Of course, I might be wrong, but that's the way I see that. That's the way I plan to trade that. And I hope it's helpful for you. If you enjoy the videos, please show your support back. Hit the like button. Drop some feedback on the comment section below the video. On Monday, I will publish the weekly PDF, so just come back to the video and on the description, you would find a link to the PDF, weekly PDF, okay? Also, if you have any question about any instrument that I don't cover, just let me know in the feedbacks below in the comments, and I will reply as soon as possible. So, fundamentally speaking, this week, the eyes would be all the way to Wednesday, where we have the FOMC meeting minutes, and then on Friday to the speech from the Federal Reserve Chairman Powell. So that's the two main events for the coming week. Now let's quickly go over the outlook as we had it in the previous week. That's our PDF from the previous week. So that was the first pair we discussed, the euro dollar. Our idea was right here, rallies and sell. We wanted to see one more push until the divergence is forming, and this is exactly what we got here. Rally and sell. Now divergence is in play, convergence principle is in play. So far so good. Now let's go back to the roots. The idea for us was to get two waves, bullish divergence starting to form, weekly with daily combination. Daily divergence is in play as well, and we have two cycles here. Each of the legs is a cycle by itself. If this is a special, that is a double. You can call it also triple. Ascending, the idea here is the same. We are now after a look for buys, at least for a correction. Maybe it's still not for the long term, but at least for the correction period. So that's for the euro dollar. Now the idea is very simple. We are at least after corrective cycle. Corrective cycle could be two waves, or corrective cycle could be range. Okay. So for us, that means we are looking for buys, drops back to these areas, 1, 2, or even new low for a second false break is acceptable. Every drop with bullish reversal signs, we should be looking for buys for the second leg, or at least for a range. So our plan is buy the drops. The next pair we had on the list is the pound dollar. Let me go back here. Pound dollar, our idea, we start looking for the buys from this area, or if it doesn't hold the next area, but the thing here with the pound, it does hold the previous zone. Now the pound dollar has two cycles, classical magnet zone, 1 and 2, beautiful bounce here. The divergence come in play for the pound dollar on the daily as well. Weekly last divergence is bullish hidden. And the 4-hour chart is trying to create for us the first false break. So with the pound dollar, the idea is also looking for the buys. Now what could happen here is turn around and one more false break, and then we are for buys, or we slowly going into 1, 2, 3, 1, 2, and breakout for the second leg. So as with the euro dollar, drops for us now become as a buy. That could make a new low, as we just saw. But the idea here becomes now bullish. Drops, and we are after buys. That could be two waves to the downside. It could be just a bullish sign with divergence. It could be drop with a bullish candle pattern reversals. Now, the candle pattern is not on 5 or 15 minutes, okay? It has to be the significant time frames, like 4-hour or daily, and to have the impact. So for us, the plan is also bullish. So we are looking for the buys. So we are looking here on the euro pound. Our plan is also look for the sells. Now the most conservative thing for the euro pound for sales would be the break of the trend lines, which so far euro pound here, which so far never happened. We never got a breakout yet. So we still want to see the breakout in order to make it conservative. Meanwhile, every 2 waves to the upside, it could be still for one more false break. We are after sells. So the plan was and remains sell the rallies. Currently we have one leg going on the euro pound. It was right here. Now the second leg starts to develop. There is no divergence yet in play, not bearish hidden, not continuing or regular developed. So the rally on the short term could continue. We might see that going and doing it, something like that, right? But we will be looking for the sells right after that, and for conservative, the trend line must be broken. So our plan remains the same here. Dollar yen, we wanted to go for sales, and basically we got the movement we wanted. The dollar yen remains so far bearish and reached right here, right? The 38 to area, the 110 zone. So as for now, the momentum continues. We might see that even going lower here. That's still a possibility. So for me, it is yet bearish, more aggressive now because 38.2 reached. And the whole idea here is, as long as the highs not broken and we don't have any higher highs, right? The idea here remains bearish. Now the dollar yen has kind of a channel here developing, right? So as long as that's the case, we might be looking for further continuation, aiming possibly the 109 zone, or at least the area again of 110. So my plan, as long as the top's not broken to reverse higher highs, my plan still remains to sell the rallies. Dollar CAD, our plan was look for drops and buys, right? And dollar CAD provided us exactly that. We got a drop, bullish hidden divergence, and boom. Now this boom wasn't too big and reversed right away with a double top and bearish divergence. So the question is, what's next? Now, as per cycles, the level of the cycle is slightly higher right here. So we very likely see that trying to climb higher later, but we do need to pay attention to the fact that last divergence from weekly is bearish. Last divergence from daily now after this rally is bearish, and the last divergence on the 4-hour is bearish. So the plan here is very simple. If we manage to go below here, it at least would make it a range, right? At least make it a range trading idea. So if we manage to go with lower lows, we would be looking to sell the rallies as long as the top will hold. It will become our invalidation. Okay? And there is a good chance that we are going at least towards 129 on the shorter term, something like that possibly, maybe that possibly, until the next divergence will come in play and we rally. So now, because the way the week developed and because the fact, well, we got our rally that we wanted on previous week, but now it blocked with the divergence. That's a sign of opposite and reversal. It's time to adjust and have the read, and that's what we are dealing with currently. EuroCAD, our idea was also look for the pair to drop and start looking for possible buys, and the EuroCAD did exactly that as we wanted. 61.8 kicker right here. Okay, beautiful bullish kicker. So from my point of view, we are in a reversal mode, in a fighting mode. I think that the Euro CAD would try to make us rallies, at least on the short term. We have a triple cycle here on the 4-hour chart, So we can drop a Fibonacci retrace on that part and basically look to go to these areas. Now the problem here is with the 4-hour chart, we don't have any classical divergence here, so the only one we do have in place is extreme. New MACD histogram low with RSI on 20. This is extreme divergence with a bullish divergence coming from the daily. And that's why drops and buys, from my point of view, is the correct thing to do right now. Next one on the list, New Zealandian Canadian. We were into sells and we got ourselves going and going and going. Now on the short term, we are after possible retraces. We have the 100 level, a kicker, and we have a magnet zone of the second cycle right here. Okay, beautiful place. So we might face this zone as a reversal zone. 4 hours should bring us double cycle correction. As for now, it's developing yet. So from my point of view, this becomes as a possible zone to buy on the short term, at least. After that, I believe that we should be getting further sell continuation based on the daily chart. But meanwhile, I think it has the room to go further. We have the Fibonacci here, so we can get 0.8720. We can get 0.8760 zone, maybe even slightly higher. And by the way, the zones for the EuroCAD also are based on Fibonacci's, what we have right here. That's 150.50 and 151 plus. Okay. All right, let's continue to the next one. Next one on the pair for us was the Aussie versus the Kiwi. We wanted to go for sell as long as the 111.50 holds. So far, our plan follows sell the rallies is the plan, and I think this is the plan for the coming week as well. We got a double cycle, 111.50 holds, double top on the candles there. We had a divergence here with the moving averages. It looks okay. So from my point of view, it's still short-term sell the rallies. So that could be two waves and sell. That could be some kind of a range. And sell the rallies remains the plan. Next one on the list for us was pound franc, looking to go lower towards 126 or 124 before we deal with any buys. 126, boom, reached. So what do we have so far on the pound franc? We basically have something that looks like double false break, right? But the problem is that we don't have any two candles rule really in play yet. We can see that also the alternative trend line forms opportunity, and we have higher highs now starting to look like creating, trying to make a convergence idea. So the way I see that, the pound franc is on critical zone. I would not be surprised if after some rally we get one more attempt for a low just to finalize the divergence here. But the way I see that, every new low to be created, if it is created, it's now a buy opportunity. So if we get that going, let's say double wave correction 1, 2, and then one more low towards below 126, to be 125, 124, it is right to make the buys. So for me, buy drops, even if that's a new low, is the plan for the coming weeks. The main plan. Yes, we can still try and look for some kind of short-term drops, but I think that from these levels, with the divergences developing, buy these drops is the smarter thing to do. Aussie dollar, our plan was bearish during the week. We got our beautiful drop down here. We got a continuation beautifully. So the question is, what's next? Now, if we put the Fibonacci cycles, we figure out that we are dancing still around the level of the 100. Now, there are several ways to measure that. One of these ways is this, and that will make it like kind of a special cycle. Definitely not the sexiest one, but still correct. Divergence in play, of course. We also have here a double cycle which is in play by itself and making it to bounce from 61.8. Now, not just that, we also have the second false break here, alternative trend line. So the drop, as we wanted to see, is holding. Now it had a range towards 0.71, 0.70 even, but as for now, it's holding the 0.72. Very serious psychological area. It's also very strong support zone from the weekly chart. Weekly has divergence. The way I see that, Aussie dollar is bullish. So drops are for buys, and for me it's bullish with invalidation here. So buy retraces is the plan for me. Also, if we take a look on the Forex crystal ball statistics, we can figure out that this low was created on the 16, right? We don't have the 16 in play, but we can see that since the 12, it is basically preparing us for the reversal. And 12 was right here. So it slowed down. 16 was basically the day for that. Critical days for lows now are basically on the 20s. So we need to pay attention to that. If we have these corrections, that should be a very nice buy opportunity for us on the days to come. On these days to come. Aussie franc, our plan also was look for the sells, and we got them right here. As for now, same story like the Aussie dollar, we can start switching to buy dips. So basically it's as for now falling 1-to-1. And that's basically the main ones from the Forex. Now there is one more that starts to be interesting in the Forex pairs, and this is, where is my pair? Here, pound versus the kiwi. The pair is in a range, so we might get the second leg developing now finally towards this zone, and that would become the second leg as well, right? So there is a chance we are going down here, where from big chance we are to fly. One more pair to pay attention to is the New Zealandian dollar by itself, like the Aussie dollar. Basically is doing the same. 1, 2, 3. It has the triple spot here, divergence in play, the big cycle here. Definitely acceptable for corrections. So from my point of view, as long as the invalidation holds, we are for buy the retraces. That's my view here. Just to make sure I didn't miss anything. Yep. So now for the gold and silver. The gold we wanted to see lower towards 111.80, and we got that going exactly that. Our explanation was it couldn't break the 2 candles rule on the previous week, made a new low for us. This was the low. It crossed the 111.80, trying to spike through 111.60, but now is holding it. The hold is pretty stiff. We have the 161.8 level holding. The divergence is in play. It looks like also a fake convergence developing here. So with the gold, we can expect short-term retraces at that point, but I would not be surprised if we actually try after that some new low. So short-term rallies are definitely acceptable. Long-term, we don't have any switch, any change, and that's how I would treat that. 2 waves and possible sell continuation. So short-term rallies could be in play. Longer term might still take us lower. There is nothing as for now stopping that. DAX, our plan was bearish. Let's take a look on our DAX. And we got that going. Now we need to see if this would be a block or not. But as long as we have the lower lows here and the lower highs now, right? High, high, low, low. For us, the plan is still bearish, sell the rallies. Nasdaq fighting its own tops. So as long as that's the case, I still think we might have one more false break, or if we get the lows, we can start looking for the sells. So basically the idea for us is if the double top holds and we create lower lows here with convergence, that becomes a sell rallies plan. Alternatively, one more fake breakout would also bring the sells. Now one new add-on from the commodities, it is a sugar, not a healthy, just for trading. Sugar is extremely low, now developing the beautiful cycle. The weekly shows a monster divergence coming in play. Monthly is a cycle by itself. And if we measure our Fibo, we figure out that we are dancing right around the 61.8. That becomes a critical area for the long term, and I expect that to make that turn around. So for long term, that could be a very interesting invest. We don't have yet any false break and higher highs completed. We have a false break here. We never got a second one. So once we get a second one, we would want to see highs creating and start making the buys. So what is possible in that scenario is false break, higher highs, and then buy retraces, or alternatively slow push with one more scenario like this and better improved prices for the buys. The way I see that on the coming several weeks, it's about to complete the reversal. And for cryptos, we had our plan bearish on the Ethereum versus the Bitcoin. That was our plan, go to this area, and we are now inside this area. We had a beautiful reversal. From my point of view, this zone is to start looking for buys, even if we have new lows. So that could be something like that, and still providing us the next buy opportunity. Alternatively, it's making us triple, double, and breakout, and we are for buys. But not just that becomes interesting right now. Bitcoin that is holding its daily the daily lows, so we need to see how this range behaves, right? We might get the range providing us some buy opportunity, or just making it kind of a channel here. Definitely starts to be interesting as long as this supportive area holds. That's the most important thing. Where is my Ripple here? Also holding so far the psychological 0.25. So what we want to see is triple cycle. We got 1, 2. We want to see the 3, and then we are after buy retraces. Of course, all is relevant as long as the last supports and lows hold. So that's basically all for the coming week. A lot of opportunities. Also, it's very important to review the previous week to see how our things develop, like a series, so we know where we follow from step to step. Some pairs look better, some pairs become trickier, and we need to adjust. That's the reason I do it this way, so you remember, guys, not to marry any trading idea, because it's too easy to fall in love with the idea. Oh, now I'm going to make money, but the market does not agree. So it's important not to marry the idea, and when the market shows the opposite signs, like with the dollar CAD, for example, at the moment you got the opposite signs, make your money. The idea of trading is make money, not to be right, not to have the best calls, not to predict the best or analyze the best or anything like that. The idea is to make money, and once you have the spot on and you have the signs against you, make the money. There is always another chance when it comes to trading. Okay? That's all. Thank you very much for watching this video. I wish you a wonderful, fantastic trading week, and also in your personal life. I hope you enjoyed the video. If you did, just hit the like button. I am Vladimir Ribakov, Traders Academy Club, and I'll see you in the live trading rooms. Bye for now.